Hi everyone, welcome back to another video from Rookie Investor. In today's video, we'll go over the ways you can make money in the stock market, as well as the difference between investing and trading in the stock market. So let's get started. The simplest way to make money in the stock market is from stock appreciation, by buying a stock at a low price and selling it at a higher price. Buy low, sell high. Usually, the majority of traders do quite the opposite. They buy high and they sell low. If you have any relation with crypto trading, you must have heard that quite a lot. But let's get back to our main objective of the video, the ways to make money. And as I said, this is by stock appreciation. For example, if you bought Apple at the beginning of 2019, each stock was roughly priced at $40, while today it's trading around 160. Buying at 40 and selling at 160 is an example of buying low and selling high. I know that the question you may have is how to determine which stock to buy. Well, there is a procedure to follow which will allow you to check if the company is good or not, but even then you will never be 100% certain how a stock will behave. If there was such a way, I'm sure that everyone would be rich today. Anyhow, to move on, the second way to make money in the stock market is through dividends. For those not familiar with the word, a dividend is a distribution of profits by a corporation to its shareholders. When a corporation earns a profit or surplus, it is able to pay a proportion of the profit as a dividend to the shareholders. Keep in mind that not all companies are paying dividends. Amazon and Netflix, for example, belong to the list of the companies that they do not pay dividends. A well-known company that pays dividend is Apple, which every quarter is paying a small amount of money for each stock owners hold. As you can see, the last payment by Apple was 23 cents per stock. That means that if you had 100 shares of Apple, you would have received $23. I know that the amount sounds quite small, but you get this 4 times a year. So in Apple's case, for 100 stocks, you would be getting about $100 a year. What is great about dividends is that it's a passive income. You still have ownership of all your stocks, you don't have to sell any of them, and at the same time you make some money. Apple has a low dividend yield of about 0.6%, but there are other companies that pay much higher dividends. I will dedicate an entire video on dividends and we will go over some of the highest payment dividend companies in the market. Now, there are two other ways to make money in the stock market. The one is shorting a stock. Of course, to do that, you will need to have a margin trading enabled account. For those who are unaware, short selling occurs when an investor borrows a security and sells it in the open market and then plans to buy it back later for less money. Short sellers bet on and profit from a drop in a security's price. This is quite the opposite of making money with stock appreciation. To be fair, this method comes extremely handy in times when the market is on a downtrend. Shorting stocks could be complicated, so it definitely deserves its own video, something that is in my plans to do. Last, you can make money by buying and selling stock options. A call option gives the buyer of the option the right, but not the obligation, to buy the underlying stock at the option contract strike price. The strike price is merely the price at which the option contract converts to shares of the security. A put option gives the buyer of the option the right, but again, not the obligation, to sell the stock at the option's strike price. Every option, though, has an expiration date. Once more, a complicated topic which we will dedicate an entire video with step-by-step guide on how to execute options. To summarize the 4 ways you can make money in the stock market: stock appreciation, buy low, sell high; dividends, earn passive income by owning a stock; shorting a stock, bet that the security will decline in price; and last, call and put options. In the second part of this video, we will focus on the difference between investing and trading, because I'm talking with quite a few people and there is definitely some misunderstanding about the two concepts. Many do think that it's the same thing, but they're basically quite different. Investment is a dedication of an asset to attain an increase in value over a period of time. That is the definition. The key point in this last part of the previous sentence, it is that over a period of time. An investor is a person who is buying an asset for a long period of time, not for a week, not on a month, or even a year. Usually this needs to be an investment for a longer time frame, such as like 5 or 10 years, and some of them even 30 years. If you have watched my previous video, which is about can you make money in the stock market, you will know that history favors investments, that the stock market has been in a rise for the past 100 years, and that in the past 30 years the average growth was around 10% per year. That is truly a great return. So when you plan ahead, let's say 30 years from now, you buy a certain stocks that you have gone over and analyzed, you add them into your portfolio, and you let them grow. Ideally, you want those stocks to pay dividends as well, but as mentioned earlier, not all stocks do. This is an additional perk and good to have. A good investor enters the market with a purpose. For example, to make money to purchase a home in 10 years, to save money to be able to retire in 30 years, and so on. An investor should have a goal, commit to a budget, search for the right stocks, and pull the trigger. Investing is quite simple. It takes a lot of research in the beginning to pick up the right stocks, but then you don't have much else to do. Many people succeed investing with very little knowledge of the stock market because they simply bought stocks over the past 30 years in big companies like Amazon, Apple, Alphabet, Netflix, Tesla, Pfizer, and so many others and rode that insane appreciation rally. To add here that investing is less stressful. You don't have to check the market every day because it doesn't matter if the market went up by 5% or corrected by 10%. As long as the market performs well over the span of a long period of time, like 5 to 10 years, and your goals are set, you can carry on with doing what you do, and you don't have to concern yourself with the market. A quite less stressful experience dealing with the market. To note here a very important benefit of long-term investment that has to do with taxes. Long-term capital gains, which is anything bought and sold after a year, have less taxes going from 0 to max 20%, and that are only if you make above 450. Actually, for some making 20, 30, 40,000 a year, you have zero taxes. This is quite great when short-term trading, anything bought and sold within the year, bears taxes starting from 10% and goes all the way up to 37%. It's quite the difference, isn't it? Moving on to trading, which is the buying and selling of a stock focused mostly on quite shorter periods of time. I'm certain you have heard of the term day trader. According to FINRA rules, a person is considered a pattern day trader if he or she executes 4 or more day trades within 5 business days. If any of you traded crypto, and I know that many of you probably did, you have definitely executed more than 5 trades a week. Actually, I dare to say 5 trades per hour because I've been there and I have done that. Once more, I'm sliding away from the topic. Anyhow, day trading is a quite stressful process, and for me personally, it's quite the opposite of investing. The reason I believe that is that all the fundamentals that apply on investing in a stock play no role when you trade. You don't care if the stock has good or bad financials. You don't have to check the balance sheet, income statement, or cash flow. You don't even have to care if their future looks crap, like Bed Bath & Beyond, Peloton, AMC, and GameStop, to name a few companies that they look grim. For those who bought these stocks at all-time high prices, not even the investing approach can save you anymore. It will be a miracle if any of these companies survive the years to come, as their business models and financials look crappy. Back to the topic, when you do trading, you have to focus on market news, trends, market sentiment. You have to be disciplined, stick to the plan, and always make sure to take profits when you can. Also, you need to have the cojones to sell some of your positions you have on a loss when the trade goes against you, if you see that this could go even worse. Trading takes a lot of dedication. It's time consuming, it has fees, and increases your stress levels to great heights. On the other hand, it's accelerating, thrilling, and when you close a trade in the green, you feel like Leonardo DiCaprio on the Titanic. I'm the king of the world! On the other hand, if you lose, you feel like the actual Titanic. Nevertheless, trading is fun, and if you do it right, with discipline, dedicated budget, planned enter and exit strategy, which reflects both profits and losses, you should be fine. I love trading, and I believe many people do, but it takes a lot of time to become comfortable with it. Prior, I mentioned a few companies that had some amazing journeys in the stock market. The first one was Bed Bath & Beyond. I want to emphasize here as this best explains what trading or day trading can do compared to investing. Focusing on Bed Bath & Beyond, we can see that the price changes of the company's stock since April of 2020, when the stock was trading at around $4. In October of the same year, the stock was trading at $25, a 600% increase. In January, the stock traded as high as $55, and despite correcting to around 25 to 30 range, it continues spiking up from time to time. Today, after a last spike at around $28, it trades around $8. Now, what did it happen there? Did the financials change? Was there some news, or it was just hype? Looking quickly at their financials year over year, we will see some warning signs. Total revenues are decreasing year over year for the past 4 years, and the total operating expenses are even higher than total revenues for 2021. The gross profit is shrinking, as you can see, total assets decreasing at a higher rate than total liabilities, their shareholders' equity is shrinking year after year, their free cash flow suffers as well, with each year being worse than the previous, and last, cash from operating activities is going to shed as well. The company was doing so badly that in January of 2022, they closed 37 stores. Despite that, the price bounced again after that. So why did their stock rise? This was a case of hype. Some groups hyped the stock, starting buying low, pushed the price higher, and the common traders entered the market, which the previous group was glad to dump their stocks on. The reason I mention this example is because I want to emphasize that when you do day trading, fundamentals don't really matter. I believe that Bed Bath & Beyond is a terrible company based on their financials, but I was glad enough to open a short position when I saw the price going above 24, and when it bounced, I opened another one at $13. A few days later, the news hit that Bed Bath & Beyond is closing 150 stores and laying off 20% of their staff. These are opportunities that you need to capitalize on if you're trading, given you have determined your budget, enter, and exit positions. For higher success rate in the market, allocate the majority of your portfolio to long-term investments and to good and large companies that have solid finances. Trading is fun, and you can be successful only if you are disciplined and trade with strategy. Majority of traders are not. I hope that this video shed some light in the ways you can make money in the stock market, plus made it clear what is the difference between investing and trading. I will make more videos about stock investing, so make sure you hit the subscribe button, and of course, if you like the video, please smash that like button. It will mean a lot. Thank you for watching. See you in the next video.